I was told that I was the discussant for this session, and a discussant, to the best of my knowledge, is supposed to critique and comment on the presentation. And when you have such an excellent presentation from ACE, there's really nothing to critique. So we're going to go straight to going behind the veil and make some comments that flow out of his presentation, as well as other observations. But I would like us to be looking at corporate governance and going behind the veil from a very purposive, lateral perspective. Before I go on, I think there are two lessons from ACE that or three actually. The first one is that I thought I was the only shy person, but I realized today he's also shy. The rate at which he's active on social media, I'm surprised he is shy. The other thing has to do with his emphasis on our culture. And I will talk more about our culture. But suffice to say that most Ghanaian companies actually are agents of the founders. And technically, the founders tend to control them. And we haven't imbibed corporate culture the way we should. But the last observation before I move on to the main discussant issues is a very funny one. It's about how we tend to mix up issues. And this relates to one of the Orthodox churches. So you can imagine whether this is Methodist, Presby, or Catholic in a village where the priest of the church died. And then when they went home, in the traditional setting of the priest's home, he was succeeded by his nephew. So Sunday, the church is there, and the nephew comes with a full cassock and the cross, seeking to preach. He said he has succeeded his uncle. And he thought that was transferred to him, the ability to preach. Interestingly, that is how we tend to see corporate governance in Ghana. In most of our cultural mindset, we don't seem to be able to separate our personal relation issues with the corporate issues. So first, let me look at what exactly is the meaning of corporate governance. And I would like to just move on two definitions, one given by the World Bank and one as I see it simply. The World Bank sees corporate governance as the system of oversight functions that is designed to ensure the perpetual continuance of an organization. That's World Bank 1998. I see corporate governance as a very simple issue, which is managing a company perpetually in the right way and doing the right things within the law. And I want to put it in that basic way. So as a result, if I look at corporate governance, I want to look at corporate governance from beyond the simple issue of corporations, as we call them, and look at it from the general bigger issue. So let us look at what people call good governance, because corporate governance and good governance tend to go together. And very often people refer to good governance when they are referring to the public sector. Now, good governance will appear to be referring to institutions which are public in nature and which are not necessarily corporate, so to speak. So these may be referring to institutions who are set up, for example, by an act of parliament or are regulated, such as Bank of Ghana. So in order to move forward, I will want to divide the corporate governance issue into four perspectives. The first one are companies which are owned by private persons and whose misgovernance or governance do not affect a larger number of people. And I'll give a very basic example. If, for example, you sold microphone handsets or phone handsets and you misgoverned the company and it collapsed, it's not likely to affect a number of people. The second category would be companies which are owned by private persons or the same, but whose misgovernance will affect a very large number of people. And these will include non-banking financial institutions and banks, whether these banks are owned by the state or not, but I'm referring to companies which are registered as private limited liability companies. And by the nature of these organizations, their misgovernance have a very, very wide impact. But I will not limit it to banks. Now, if a bank collapses because of the number of depositors that it will affect, or the simple decision by Bank of Ghana to save some banks may cost the taxpayer 5.8 billion over time because of the bonds that will be raised to save them, you will see that private as they may be, the impact of their misgovernance is quite large. In this same category of private companies or companies that are owned by private persons, I will put private universities. So if, for example, a private university collapsed, it will affect quite a number of students and future generation whose education and future life may be affected. Similarly, if a private, really owned radio station like Citi FM is misgoverned, it may incite people to do the wrong thing, as happened in Rwanda, and cause genocide. So this category of entities are privately owned, but their actions or governance and misgovernance have a wider impact. The third category are those which I'll classify under the category of SOEs, the so-called state-owned enterprises. We tend to forget that these entities also require good governance, and indeed, they are corporate. A lot of them, by virtue of Act 461, the Statutory Corporations Conversion to Companies Act, have been registered as limited liability companies, but are not functioning or being made to function as such. Let's take just 2 examples, or 3. BOST, Ghana Water Company Limited, and ECG. These are private limited liability companies, except that the shares are held by the state. Let's assume that the government was not perpetually bailing Ghana Water Company Limited. And let's assume Ghana Water Company collapsed. That is a massive issue that can affect the whole nation. To the extent that private sector participation has taken place in ECG, let's assume for once that ECG was being run purely by the private sector and ECG collapsed. We will not be having this session this evening except by use of generator. Let me take some water. So the fact that a company is a private limited liability company does not mean that it does not have public, or it doesn't have a character of public interest. The fourth category of corporate governance I will want to talk about are those that belong to the group of statutory corporations. These are entities which are set up by the state as a result of an act of parliament and whose governance rules are within the act that sets them up itself. And there are many. Some of them are regulators, some of them are implementing entities. Let me just give a couple of examples. One of them may be universities like University of Ghana, University of Cape Coast, University of the one in Volta region, new one, and KNUST, etc. Again, just like the private university, the actions of these entities affect quite a number of people. Not only students, but the debt, for example, they may incur on behalf of the state can be something that will lead to something that you and I will be paying for. Similarly, if you take this category of statutory corporations, it will include, for example, the National Communication Authority, who, if do not supervise the radio stations very well, or do not ensure that the telcos are functioning the way they have to function, can lead to a wider impact on the society. What about Bank of Ghana, which is also set up by statute? The misgovernance of Bank of Ghana will lead to the collapse of banks. So we should not restrict corporate governance to only the companies that we are governing, but even the supervising entities themselves, if they are not properly governed, because the Bank of Ghana is properly governed, this collapse will not have occurred in the first place. If you look at 930 in its entirety, the negligence started from Bank of Ghana. So I can go on and on and on about statutory corporations, but let's restrict ourselves to these 4. What lessons do we learn from the Bank of Ghana press release of 1st August 2018? And I'll just mention a few. One is lack of internal systems. Clearly, these banks, notwithstanding all the quotations ACE gave and the copious references that we have in our laws and in Bank of Ghana's own corporate governance rules, the internal systems were simply not there. It's as simple as that. 2, there is lack of external systems, which is the oversight of these institutions. And again, I do not want to bore you with legal quotations and sections. These things are very obvious. 3, which is very typical of Ghanaian culture, and which is why I refer to ACE's reference to culture, is that the lessons from the past has never informed us about anything. Why do I say that? This is not the first collapse of a bank in Ghana. And neither is it the first failure of financial sector. I will give several examples. I can give several examples, but for want of time, let us just hurry up on this. The merger between the then Social Security Bank and the National Savings and Credit Bank, which was the Post Office Bank, did not just happen. It was as a result of liquidity challenges for the National Savings and Credit Bank at that time. Social Security Bank has since become Societe Generale. Prior to that, it was SGSSB. The collapse of Meridian BIO, and I had just started working around that time, and I remember those days the value of 20,000 cedis, not 20,000 Ghana cedis. It must be 2 cedis or a few pesos then. I lost my money there. So it was my first experience of a collapse of a bank. Today you have Oka Deco occupying those premises. Before that was the collapse of Bank for Housing and Construction. This is not the first construction bank. We did have a Bank for Housing and Construction, which also collapsed. The acquisition of Trust Bank by EcoBank, the reasons, if you look at it from a tangential perspective, related to the overexposure of SNIT as an entity to the banking sector. Again, we never learned any lessons from there. Just across Nigeria, there were a lot of bank collapse similar to this, including bank managing directors who ran away and they were pursued by Sanusi. We never learned lessons from Nigeria. Not long after that, after Nigeria strengthened its banking sector, 5 Nigerian banks or so, 4 or 5 if my guess is right, moved into this jurisdiction within a period of 3 years. The Bank of Ghana licensed so many banks from one country. I have nothing against that. But Nigeria was able to expand its banks across Africa because it learned the lessons and strengthened these banking institutions. And we learned nothing from Nigeria. In fact, the acquisition of Intercontinental Bank by Access Bank itself has lessons that we could have learned from. And again, we learned nothing. What surprises me is the Bank of Ghana report on Royal Bank in particular. It cites 78.9% of non-performing assets. What shocks me about that is that we never learned any lesson. In fact, there were a lot of non-performing assets, so much so that under the Financial Sector Reform, Act 518, the Non-Performing Assets Recovery Trust was passed. And we set up NPAT with its officers next to where AMA is, and it actually sought to recover these assets or to write them off. So we had a whole law on non-performing assets in a similar situation. And again, we learned nothing from that. For those of you who may be old enough, you remember A-Life and the issue of checks across various banks. Again, we learned nothing. Even currently, this is something people don't talk about. There are the issues about a particular commodity broker or importer who is alleged to be exposed to a lot of banks. Again, these are also known. Again, we learned nothing. And all this occurred pre-UT, pre-Capital Bank, pre-the Consolidation Bank. So it would appear that there is something basic about our culture which let us fail to learn lessons, and more importantly, to put in place measures that will prevent the recurrence of the disaster. I need water again. What has happened to other countries where such similar things have happened to the banking sector? I will take the US. In the US, Enron collapsed. Enron's collapse was not so much of a bank, but a company in the energy sector. But it was bringing down other banks. Quickly, the US passed the Sarbanes-Oxley law. And Sarbanes-Oxley law was designed for public company accountability and investor protection. And it put in place so many measures that prevented the recurrence. One of the most significant things of that era was also the follow-up as late as 2010, immediately after the financial crisis, of the passing of Frank-Dodd. And the Frank-Dodd Act, again, was made to protect investors. I don't want to go into the details. But you will find a very significant lesson which I notice is missing from the Bank of Ghana publication. And if somebody has the information, please correct me. And I don't necessarily blame Bank of Ghana as it is. These are legacy problems. I understand that. But we need these comments in order to discuss it and examine it as a nation and decide what to do with it. Now, Frank-Dodd put together 16 clear areas within which banking institutions can be strengthened. But you will notice that between Frank-Dodd and Sarbanes-Oxley, one of the biggest accounting firms Anderson Consulting at that time, and Anderson Tax went down. Anderson, I understand, has reappeared in different forms. So we used to call Pricewaterhouse, KPMG, Ernst & Young, and Deloitte the big five, because at that time it included Anderson. Today we call them big four. Anderson had to vanish. We know what happened in South Africa recently about the Gupta case, which affected KPMG in South Africa. I have nothing against KPMG. I do work with them. But these illustrate things. The big question in the Bank of Ghana publication, which I'm asking, which auditing firms audit these banks? Can we be told which auditing firms are auditing these banks? Lawyers who know, what law practice is about, take professional indemnity insurance. If you misadvised a client and the client brought an action against you, he will go after your insurance at least. So we know that we can misadvise clients. What about auditors? Our Companies Act seems to be written in such a way as to protect auditors. But as a regulator, will Bank of Ghana tell us who audited these banks? Were the accounts qualified accounts? Did they say that these accounts had been prepared in accordance with IFRS or Basel, and all the requirements have been kept? Were they signed? These are questions we need to ask, so that just in case the same auditing people are auditing another bank, we know. Or maybe it's as a result of some incompetent people within the auditing firm. I'm not talking about necessarily the big four. I don't know who the auditors are. They may not be the big four. So the big four don't come after me. But they may have people within these firms who are incompetent and acted on behalf of the auditing firms and did the wrong thing. Can they be exposed so that we fire them? It will appear that this aspect is being ignored, and it is important to take a look at it. The other lesson is our culture. Our behavior doesn't seem to be set in the modern contextual corporate environment. Or better still, we don't seem to have adopted our legislation to our culture. So the owner influence is so heavy and we do nothing about it. I'm told that the executives of some banks who go to owners every morning to go and take instructions. That's what the rumor mill has it. But if Bank of Ghana holds the chief executive responsible, is Bank of Ghana going beyond the veil to see whether the chief executive is competent enough to lead a bank? What were the years of experience? And who is the owner who is remotely controlling the chief executive from afar? I happen to have been serving on a financial institution, not a bank. And I resigned from it on a very simple principle. After 2 board meetings, I drew attention to what I thought was wrong, something very minor. And because this institution was supervised by the Securities and Exchange Commission, I said I will not be sitting here when the owner sits somewhere, and if I am called, the owner is not on the board, and I will be responsible. And I walked off. It appears that by our tradition, we see sitting on boards as just a prestigious allowance-taking exercise. Now, the issue of independent directors is part of Bank of Ghana's corporate governance guide. Who is enforcing it? Is there any independent director you actually know? Is there a training and certification for independent directors? I know one particular financial institution in Ghana which we advised, and they have an independent director, and it's one of the few indigenous which have survived. And I do believe the role of an independent director has helped. Another lesson is the structure of our regulatory framework. We need to restructure it. And I've talked about Bank of Ghana, so I'll move on to one that we don't seem to talk about, which we need to really, really deal with. The Registrar General's Department. Actually, the Registrar General Department often reminds me of the Road Traffic Act of 1950, Ordinance number 52. For those of you who remember, that law said that until the Commissioner for Licensing is appointed, the police will act as the Commissioner for License. And many of you know that for many, many years, the police were the ones who issued the license. When DVLA was set up, it took a while for them to manage to extract it from the police. Today, DVLA, despite all its challenges, is doing very, very well. Registrar General, as designed, and look at the law, is supposed to be an independent entity on its own. But it is still a department of the Attorney General's office. We have gone past a situation where the Registrar of Companies is a mere department of the Attorney General's, or the Ministry of Justice. We need a Registrar General which is strong and plays the supervisory regulatory role. Because indeed, if the Registrar General office is fully equipped and playing that role, Bank of Ghana's work will be easier. And a lot of entities will have better to manage their corporate governance. Everybody files annual returns at Registrar General. But the function that is equipping them to be able to take that annual returns and actually play that regulatory function is not, and it's not their fault. We need to take a look at it. But let me still touch on Bank of Ghana. Is Bank of Ghana still equipped to play the role of a banking oversight entity? We need to. Frank Edu, the MD of Carl Bank, has made a certain recommendation, and I agree with him, that perhaps it's about time Bank of Ghana itself is broken into two. Where you have the person or the entity which overlooks the government's checks and the government's expenditure and the monetary policy and everything. You know, the Bank of Ghana is quite focused on inflation targeted and all that. That's one function. But the Banking Supervision Division may be looking at the possibility of looking at the prudential regulators you may have in other countries or a financial services authority. These are things we need to examine. Is Bank of Ghana still designed to be able to supervise 30 banks? I am not one of those who believe that we have too many banks. Every nation and how, but it's the structure itself. As you are aware, the financial intelligence unit has now become autonomous, as it were. We need to look at the Banking Supervision Division and look at what can be done at Bank of Ghana. Perhaps the most well-qualified person to do that, incidentally, is the governor of Bank of Ghana, current governor. So I'm not surprised that he is doing the things he's doing. And I say so because in 2000, EKY Addison and one entry, TO entry, actually published a well-researched document on Ghana's financial sector reform, where they recommended a restructuring of Bank of Ghana. So I think if we go back to some of those publications, we can implement, and I happen to have been reading the publications all over again, and realize that almost everything is there. Like I said, we have all the laws, we have all the recommendations. Maybe implementing them will help. Now, I think there are other wider lessons for the society that we can learn in this, and let me be concluding with those suggestions. One of them is that perhaps Bank of Ghana should consider publishing the list of directors of all banks for us to know. Because under their guidelines, directors are supposed to be persons who meet certain criteria. But I don't think anybody here has seen, I don't know if you have, let me know, where you have seen a publication that this person is a director, and if you have any whistle to blow on that director. Maybe it's about time we did that. Because if you look at the international banks, they go through a rigorous process to appoint directors to banks. The issue of independent directors I've already talked about. I think it's about time directors undergo yearly knowledge update with certification. I think it is also about time Bank of Ghana constantly keep the veil open. And what do I mean by that? Shareholders should have direct responsibility to Bank of Ghana. In fact, there's a provision which was in section 172 of the former, the repealed Access 54, that's the then Financial Regulation Act, which is now replaced by the PFMA. And that provision, I don't know its current equivalent, but that provision, persons who are appointed to state-owned corporations as representing government are supposed to file a half-yearly return to government regarding the health of the corporation. The truth is nobody files that. But assuming you adopted that and applied it to regulatory entities, by regulatory entities, and you make shareholders themselves report, in addition to directors, it will help. Why do I say that? Because the truth is that in Ghana, by our culture, shareholders seem so much intermarried with the businesses that probably this is one of the things we have to be looking at. Indeed, a lot of shareholders are doing nothing more than transfer pricing in some of these institutions. Quite a number of subsidiaries belonging to them. Some of them actually have, even the IT, that systems they use are created by other entities belonging to them. It's about time auditors are held liable and we amended the portions of our company's code which gives them the freedom to put everything on the directors. Austria has actually done that. The Austrian Supreme Court has a ruling where the statements made by an auditor, if relied upon, can the auditor can be held liable? It's about time we looked at that. Apart from banks, I think it's about time we publish a disqualification law where directors, the procedure in the company's code about directors persons not being qualified to sit on boards, especially those who have led to the collapse of companies, is further enhanced. And people are made to make statements themselves before they accept the directorship position. The last but one on that list of recommendations is the fact of declaration of dividends, which is touched on. It is time where Bank of Ghana consider actually making a statement that it publishes that it has examined the audits of the banks, and the Bank of Ghana is publishing that the bank has actually done everything right and it can go ahead and distribute dividends. Because we cannot wait for Bank of Ghana to come after every few years to tell us that the system is bad. Bank of Ghana should make that own declaration itself yearly, that I have verified the audit report and I have checked the supervision, banking supervision has checked, and I'm saying that it is right. So we can rely on that statement. Regulators also ought to be held to account. I think Bank of Ghana should create a whistleblower role. Now, if you take a look at the case of Barren Bank, Enron, and Citi Mortgage, it is actually whistleblowers within the organizations who alerted the regulators that the wrong thing was going on. And these are some of the things that we need to look at. And finally, I think we should, as a nation, devote more time to the debate on our cultural behavior and attitudes and how it sits within the corporate environment as a people. If we may consider, for example, creating a situation where certain category of corporations are not necessarily required to have this strict corporate governance. If, for example, I'm Koshivi, so to speak, and I'm operating some small carpentry shop and I'm expanding and I have to set up a company, do I need 2 directors? Do I have to file annual returns? Some of these stringent things we need to look at and maybe set a threshold and say it is only when you make a certain amount of turnover that you move to that category. And then we begin to enforce these things very strictly. I think without paying attention to our culture and positing our culture into the modern corporate environment, we will keep talking and we will never attain the goal. The important thing to realize in conclusion is that we must not forget that corporate governance, whether it is from the state-owned enterprise of a university, the oversight entity of a bank, highway authority, or whether it is from a private limited liability company, it is the collective production of SOEs, banks, oversight entities, which constitute our GDP. And it is a serious issue that we must look at it from that angle. Thank you very much.